Hello traders, this is Stacy with Trade the Bear, and this is a weekly update. Be February the 18th, 2022. My goodness, time is flying. So this week we took a little bit of punishment. I made a couple of mistakes in the market, not really following the rules like I should have. I got a little squirrely with it, and whenever you do that, you pay a little bit of a price, as we can see. So today we're gonna talk about. Oh, let me move this out of the way. We're going to talk about a few things, and so let me bring this over here. All right, so our weekly trading results. What's the purpose? Of course, to have fun, and making money is fun, right? Live tracking, only a few traders who are trading actually show results. So we're going to go in and talk about what the results are. You can see this on my webpage. So at any given point in time, you can pull up that page. I'm trying to update it weekly, and you can see exactly where our results are. The other thing that I'm going to start doing is I'm going to put a little bit of training in each one of these and just share some of my own ideas about how to manage the trades and some of the things that we're doing. One of the things that we're going to talk about today is how to manage risk with options. So I'll show a little bit about that. So if you stick around to the end, we'll get into that. And then we'll go into the the idea is I set up a Roth account back in like October with $2,000, and today we're sitting at close to 3,000, a little over 3,000, and that's about a 9.5% year-to-date increase, because January 1st we were sitting at about $2,800. So the instruments that I'm using, we'll go in and we'll talk about those a little bit, the KRE and the XLF. And the good thing about today is we're going to be talking about the risk, and you'll be able to see how I'm managing a small account, which is a little bit different than if I was managing a larger account. Other instruments that I use in my larger account, I'm also doing the KRE and the XLF, but I'm also doing the QQQs, the SPY, home builders, and XLE. And then we'll take a look at the overall markets, and like I say, at the end we'll talk about managing risk with options. So let me move this out of the way. Let's get over to some charts, let's bring over the actual results. So this is my webpage, tradethebear.com, and if you go over there, you'll see a page for 2022 small account results. And as you can see here, I'm going to try to post this on a weekly basis, but you can see 9.5% increase year to date. So we're sitting at 3,089.02, and then I've put all the trades in, so I'll try to keep track. Like I say, I'll keep track of that. So let's go in and look at what happened this week. So let me get over to the KRE. So what I experienced was, let me get this other stuff out of the way. What I experienced here is I saw this little move here, and I thought, we're gonna go. This thing's gonna take back off and go up to here, and then I just got spanked and got popped down. I shouldn't even have been long in the particular market that we're in. I should have been a lot more. I should have managed my risk just a little bit different for that particular trade, and so I'll be doing that a little different in the future. When we look at the weekly chart over here, we can see that this is kind of trying to make that move up. So that's a little bit of what got me excited about going long on this. But all the indicators here, I mean, you got a good strong pull down here, pull back. If we were to look at this on what's going on with the we didn't quite get up to the 78.6 on that. So as far as a pullback goes from this swing, this latest swing, so good chance this will get back down into here. Let's hope so. The other account that the other one that we're managing is the XLF, and that one we just stayed pretty much true to ground on it. I mean, it has it's just making a move down, and things are still going down. Now this doji pattern here, this could be a pull. This could be a pullback with the opportunity of heading back up. So we'll see as we go. You can see what the Keltners are telling you. You can see we're at the 50% point on this pullback. So let's just watch it, and we don't care what it does, just as long as it does something, and then we just try to be in the right position to catch that move. So let me get this out of the way. All right, so let's look over here so we stay on track with what we want to talk about. We talked about the results. All right, so let's go look at our other instruments that we're using. And first off, QQQ, which of course is a NASDAQ. It's going to mimic the NASDAQ. You can see we've got a nice little downtrend here, and here's going down, going down, going down, going down. This was a little bit of a head fake on the weekly, and you can see it just rolled, and now it wants to get back down. Maybe we'll make it down to here. That'd be kind of nice with the positions that I have on currently. And there's a lot going on in the world. The Fed is making changes. They're trying to get us into selling some weapons over in Ukraine. Matter of fact, they're moving quite a bit of dollars. I think maybe the defense stocks might be a good play. Not my game though. I stay out of that stuff. And then the other one, of course, is a SPY, which looks very similar. Nice push down. There we go again. I've got these little alerts in here. I'm going to get out if anything happens there. And then the other one, let's see, let's go and look at the XLE, which is actually making moves up, but in the last week or so we've been going sideways. So I'm anticipating that one will make a little move down. We'll have to see, and we'll go look at oil here in a minute as well. And the other one that I like is home builders. Looks like home builders are in trouble, and we'll see. This sideways action right now. Here's resistance up here, here's support right here, and this is moving in a particular manner. So let's go look at the gold. Notice the gold. A few guys that I know that are in gold are pretty happy right now. Let's move this out to a couple of years and get a good peek at it. 2 years, there we go. Okay. It's been going sideways, and so I would look at this area up here if I was a trader of gold, which I kind of am, because I've got a day trade going that Bubba Hurwitz is doing, and I decided to jump on board with, and he seems to go into gold quite often in that algorithm that he's using, and really happy that I can participate in that. Thank you, Bubba. It's pretty cool. There's gold. The other one, look at oil. Of course, oil's being impacted by everything that's going on over there, and you can see just a nice push up. Just boom, nice, just steady movement up. Being manipulated quite a bit, obviously, with everything that's going on. But you got a level. If I was to draw some lines on this one, which one? Wrong one. There we go. Drawing. Let's go here. Go into here. Put one there, and then I would have one right there. So that's the range that it's trading in currently. Looks like you got a minor, you got an interruption level right here. So we'll see if it can break out and get back in there, or if it's just going to trade sideways. If it was to come down, it's probably going to come down to this area here. So just kind of watch this low, maybe even this low right here, and this one here is what I mean. And let's see if let's see what it does. And the other one that we're going to look at is, of course, bonds. And as we know, those are the Fed is playing games. They came out this week. They did a little bit of a move I was reading where they were telling everybody they were going to go harder on the interest rates, and then they just stayed true to plan on what they've been advertising all along. But they had this one guy out there, talking pretty heavily, kind of doing some marketing on their own, saying we're going to be more aggressive. We're going to be more aggressive. And then their minutes came out Wednesday and basically said, nah, we're going to stay the course. We're going to stay the course. So, I mean, that's the way I kind of frame it up anyway. And then the last one I kind of like to look at is just the dollar. Not that it really influences anything that I do. And, it's just kind of going, over here on the weekly, it's making a nice move up. But on the daily, it's moving looks like pretty sideways. So let's talk about how we will manage risk, and especially on an options trade. You need to understand delta when you're dealing with options. You know, I always like to say delta basically is if the underlying, meaning QQQ. Let's say we're talking about QQQ. Let me put that up here. All right, so QQQ, let's say QQQ moves a dollar, then delta is going to say, if it's a 70 delta, then it's going to move 70 cents to every dollar approximately. But delta has a tendency to move move around as the underline goes up and down. So if you get some aggressive moves, you can see your delta change pretty dramatically. So it's kind of neat to be in at a 70 and have it go to a 1, and then then you're moving even quicker. But let's say that let's say we were going to trade the Qs right now, and how might we calculate risk? Let me get this drawing up here. So what we could do, this is kind of a neat little thing that I just recently learned about in Thinkorswim, and let's say that this was our level where our stop was going to be, and we were going to go short, right? So you can see there, that's $17.63, as you can see right in there. So basically from here to here, so what I would do is probably take that 1763. So what I'm thinking is, if I got in here and it went back up to here, then that's where I'm gonna stop out. So let's take that 1763, and we're going to multiply that by our delta, which is $12.34. So every contract that I would put on, I would have, if it was oh, did I do the 70 delta on that? Yeah, so 70 delta. So $12.34 not per contract. You'd have to multiply that by 100, because each contract is equal to $100. So what you'd be looking at is $1,234, obviously, and that would be your total risk for each contract that you would put on. So if this was going to make its move and it came up to here, and you were to stop yourself out and have a stop right there, you'd be looking at the $1,234. So now, how much are we going to risk? This is why we can't trade the QQQ on in a small account, and this is why I like the XLF, because the XLF, let's just say we were going to get in this move right here, and we're only $1.19. So we could take our $1.19, multiply that by what? 0.7, and that's 83 cents, right? So times 100, oops, that would be $83. So now every contract that I'm risking $83 if it makes that move back up to here to stop me out. So you basically take the high, the swing high, and maybe that closing level right there, and that's how you determine what your distance is going to be and what you're willing to risk. So if you had two contracts in the XLF, you'd take the 83, so you'd be $166 risk. So how many contracts am I willing to risk in an account that only has $3,000? Well, I'm basically hanging out at about 5% risk when I'm managing two positions, because me personally, I don't like to have more than 10% of a portfolio at risk. And so that means if I'm trading two instruments, then I'm going to be 5% and 5%. So let's take that $3,000 and multiply it by 0.05. So that puts me at $150. So two contracts on the XLF could be all the risk that I'm willing to take. So I hope this makes sense. You're going to take let's say your close, let's take your swing high, and let's subtract those two from each other, and then we're going to multiply that by the delta, which is 70, and then just ask yourself, if I was doing a 30 delta, what would my risk be? Or if I was doing a 50 delta, what would my risk be? And so that's basically how we're going to do risk management. So I hope this really helps you in your trading, and I hope we can make some money together. And of course, it's all about having some fun. So I'll try to get better with these videos as time goes on, and thanks for watching.